Welcome to Rogue Trader. Please read the disclaimer and remember that prices can go down as well as up. And now for a stock analysis blitz on DRAX Group PLC. This is part of my Greta Gold series, and if you click in the top right hand corner there, you can see that original video. This produced a shortlist, and I'm going through and giving very quick reviews for each of these stocks to then come up with a final shortlist where I'll be going into each stock in more detail. So DRAX started out as the DRAX power station, and this was the largest power station in the UK, producing about 4% of the whole of the UK's electricity, and it was a large coal-fired power station. When the current DRAX Group took it over, they were the dirtiest company in the UK in terms of the environment, but they've progressively made themselves greener and greener, and I'd almost say that they're fanatical about being green. What they've done is they've converted this power station from generating electricity from coal into generating electricity from biomass. So for biomass, what they do is they initially cut down trees, and most of these trees are in the US and Canada, and they're from sustainable forests, so it's okay. They then go through a chipping process. They're then transported to a pelleting plant. They go through this drying process that just takes some energy, and then they're pelletized. They're then transported to a port in lorries. They're then shipped across the Atlantic Ocean and then go by train to the DRAX power plant, where finally they're burnt as if it was coal. So DRAX's biomass generation is 2.6 gigawatts, and the latest numbers I had were 2019 and then the interims for 2020. And then this time they also had 0.6 gigawatts hydro, 2 gigawatts of gas thermal energy, and 1.3 gigawatts of coal thermal energy. Now in 2021 they're closing down the coal plants, and they've just sold the gas plants, and I'm surprised they only got 193 million for it. Now I was looking at the numbers, and they're all a bit patchy. They're paying increased dividends and highlighting how good their EBITDA is, but their net income dropped from 20 million to only 1 million in 2019. And then when we get to the 2020 H1, the operating profit is now in the negative at 32 million just for the first half. I then noticed that they've took on loads more debt recently, and all this stuff is all part of their restructuring, their closing of the coal plant, and they're talking about moving into hydrogen fuel and moving into various other things. It's hard to really get clear, plain and simple understanding of how they're really operating from because it's so complicated with all these different moving parts. And in the end, I'm just put off by this drop in net income, and and how complicated all their accounts are, how their revenue seems all over the place, and all their costs seem to switch around. They just look like too much of a moving target for me. And then also this pelletization. They say that it's net. This is apparently the environmentalists are all cool with this burning wood as if it was coal, because they say it's sustainable forests. So the wood that you burn is then turned back into trees again, so it's net zero. But it just doesn't really seem convincing to me as a layperson, that in itself. And then when I combine that with how patchy their numbers are, they're just an immediate turn off to me. So from my fairly brief analysis, I'm not going to go ahead with putting DRAX into my final shortlist.